Welcome to the Private Lenders Podcast with your hosts from Hard Money Bankers, Jason Balin and Chris Haddon. This podcast is sponsored by hardmoneymastermind.com.
Hey everyone, thanks for checking out the show. Chris and Jason here as always. Today we're going to be talking about the unfortunate topic of fraud in this business. It is really unfortunate that it exists, but if you have private money that you control, there are scammers out there that are going to try and take it in some way. So we're going to go through a few of the unfortunately common ways where this can pop up, what you can do to prevent it. I have a few things in mind, but one thing that lenders and title companies say constantly is anytime someone wants to change wire instructions, that's an immediate red flag. There's no changing the wire instructions of where money's going to be sent, like from lender to title company to lender, lender to borrower for a construction draw. Red flag. Anybody says, oh, hey, we're changing the wire instructions. Here's the new one. Immediately red flag. Stop everything. Stop what you're doing. All right. So we have one that happened last year, and this one's kind of wild. And then we'll jump in with some of the more common ones, but the story's good, so it's worth mentioning. We have a borrower we've lent to probably 3 or 4 times. Pretty decent rehabber. He had always performed on the 3 or 4 we'd done before. And last spring, we went to lend to him on a property that he had already purchased, paid cash for it, and then he was going to rehab it. He was going to refinance, get rehab funds, do his normal flip deal. No big deal, right? So we, I forget what the loan amount was, somewhere in the 2s, 220, something like that. Did the deal, funded it, closed it, normal stuff, no big deal. And he made a couple payments, and then for the first time, he missed payments. And we noticed that, I think we did construction. I think we did like maybe 1 construction draw, and then like 3 months in, he stopped paying, which is rare for this guy. He had never missed payments before. So he wasn't very responsive with us. We had to start foreclosure. We get into the foreclosure process, and the attorney handling the foreclosure gets the title work back. And this guy had taken 5 or 6 loans from different private lenders and closed them all in the same week with different title companies. This is only possible because he already owned the property, right? And so he already owned the property, so he could carefully line up 5 or 6 different loan processes, all the people in the industry you would have heard of. Like we knew we recognized the name of every single lender in there, 5 or 6 of them at the same time. Massive fraud. He took out, I don't know, 1.2 million on a property worth like, $400K ARV, something like that. Obviously we filed a title claim. We've not yet gotten paid out on that title claim, but we should be covered. I mean, we should get out. That is one. That's kind of an extreme one. That's not the super common type of fraud, but it's possible. That's not the first time we've seen it.
Yeah. I was thinking about we got a list of a few different types of fraud that we've seen or know of. Some we've been affected by. And borrower fraud is, one of the more tough ones in general, because technically, typically you're talking to the borrower. Hopefully you're meeting the borrower. The title company is verifying who the borrower is. That's part of our closing instruction letter that's going out to the title company on behalf of our attorney who's doing loan doc and title review. Is they need to verify and be responsible that the borrower is who they say they are, right? Or potentially it's a title claim and it falls on them. So borrower fraud is hard. Obviously, this was borrower fraud, and we were kind of directly affected. We got affected by borrower fraud when we did. I think we shared this story. We did 2 loans for a borrower about 4 years ago, and he stole both properties, and he, in essence, deeded them to himself, and stole a notary, deeded them to himself, and then he went out and he got loans against those properties. And, we did low LTV loans on good pieces of real estate. And then he sold one of them and it got paid off, but they tried to unravel the entire deal, or unwrap it and unwind it. I guess that's the right one. And then the other one, we got a title insurance payout on. So that's
I have another example of borrower fraud too. And we've had this happen a couple times where somehow a borrower convinces the title company when they go to sell that they've already paid off Hard Money Bankers. Our loan shouldn't be there. And I don't know how they fall for it, but we've seen it happen probably 3 times over the years. And so, in essence, the borrower sells the property, doesn't pay your loan off. And then you find out later on through one way or another, who knows, maybe they sold it to a homeowner. This is what happened in one case I remember. Our borrower sold it to a homeowner, convinced a title company. Our loan is paid off. We did not get paid. And then he goes into default. And then we start a foreclosure process. And there's some homeowner living there. Our loan's still in place. It never got paid off. And some just regular, family homeowner is living there. And then they get notice of foreclosure. And then the title company freaks out. And anyway, we got paid off on title insurance on that one too.
Well, not that there's a, best case type of fraud, but that ends up being the easiest type of fraud for us because, we file a title claim and go to foreclose on that property that a happy homeowner just bought. They freak out. They call attorneys, they call their title insurer. And then we're typically like, get paid off within a week, which is the fastest title claim ever, just to get it, because, they're freaking out. They just bought this brand new property a week ago. So, and that's happened more than once. I think that happened at least twice that I know about. The exact same situation.
Yeah, I would guess 3. 2 I remember specifically.
Yeah. So
that's probably about it for borrower fraud.
Yeah. So the one fraud that scares me the absolute most, which I think is the hardest to stop, is title fraud. And we've never, as far as I remember, ever been affected by title fraud, but I'll never forget a story from a local lender. Have we?
Like when they make a complete fake title insurance and a fake closing and all that?
Yeah.
Yeah.
I don't think we've ever been
heard about.
I don't think we've ever been scammed on one, but I heard from a lender that was a Bethesda-based, Maryland-based lender right when we were starting out. I heard this from them and another person that fell, and this is kind of how this looks, and we'll walk through it. But it scared me so much that I've always been very cautious about who the title company is. And back in the day, we used to control title. When we were smaller, we were like, you have to use one of these title companies. And that's been harder as we've grown and scaled into different markets and things like that. But we definitely do due diligence on them and make sure that they're big known title companies. And if they're not, the easiest way to do it is on the commitment that you get the commitment, there's a phone number. Let's say it's with First American. Let's say you're going through let's say Main Street Title, and they're writing the policy through First American Title. There's a phone number and there's a commitment number. Call that phone number and verify 2 things: that title company is in good standing and that's a valid, active commitment letter. And they all have local branches, local offices. For every, First American, Chicago, Old Republic, Fidelity, everybody. So that's an easy way to do it. It's weird because back in the day, I feel like you just go online and search that and determine, like you didn't have to call anybody. And it was funny. I was talking to somebody in our inner circle group and they were like, dude, we should have a business where, we sync with all these title companies and we create a website and then you just put in the commitment number and drop down from the title company and automatically verifies it or not. Because I feel like they all did it one off, but now you have to call them. So that's an important part of your step in your closing process is to make sure you call them to verify that. Because this is what happened. This is what could happen. ABC Title Group sends you what looks like a commitment letter and a closing protection letter and everything else that goes into a doc.
Wiring
file.
instructions, like full.
It goes into a doc file. You might be using your attorney to do title review and doc prep. You might be doing it yourself. You send them your docs, or they provide you the title. They provide you a title commitment. You base your loan docs based off the title commitment. You send everything to the title company. They coordinate a closing, right? Now the borrower might be in on this, or the borrower might not be in on this, right? And let's say the borrower is not in on this and they have no idea. They coordinate the closing, like the borrower sends their wire in, you send your wire in. Next thing you know, like you're under the impression that they record your deed of trust. You're under the impression, the borrower's under the impression, or mortgage, the borrower's under the impression that their deed is on record. It never gets put on record. And this has happened multiple times that I've heard stories of. Multiple times. I don't think
we've never been involved.
I don't think it's ever affected us. And the story that hit my brain, so hit the back of my head that made me nervous, was a lender early on when we were starting, told me exactly this. It was exactly set up like this. They called the title company. They're like, what's up? Like, we sent you our wire and you never sent us our our wire back, right? Like you never sent us signed closing, closing instructions or docs or whatever the case is. In this case, they were expecting a wire for construction draws because they didn't net fund it. And they several days later, after not getting hold of them, they went to the office and they were knocking on the door, and the office was blacked out, nobody there, just files and documents and they filed a claim along with everybody else that got scammed over the last few days or week, and that company was out. But like, think about it. If you do $1 million loan and you wire $1 million to a title company, they only got to scam one person once if they're trying to steal $1 million. So,
yeah,
keep real quick, and keep in mind, like you're putting their money in your escrow account. Even if they wanted to steal that money, even if they were in good standing and they were valid, everything, you're wiring money to them. There's no sure proof, or there's no sure things that it's definitely going. There's a risk there.
Yeah, there could be a title company that's hemorrhaging money and going out of business. In their last week in business, they're going to steal as much money as they can from lenders and then turn the lights out. Yeah. Like and some title companies are flimsy operations. Like there's many very legit ones out there, but some of them are. I don't think the barrier to entry is all that crazy to get license and title. Like you can put together a sketchy little operation that who knows if they're going to make it or not. And so that's something to be aware of for sure.
And again, I think some of these things are pretty low risk in general, but like frauds, you got to have systems in place, and you do have to take business decisions and calculated risks. But like the point of discussing this is that there is fraud everywhere you look, and you got to be careful for it. And if something's not like hitting, like something's not, registering right, you might want to second guess it. I remember we had a deal recently that we thought there could be fraud involved, and there ended up not being. And the reason that we thought there was fraud involved, it seemed like it was a shady title company. They weren't that good. They didn't seem like they knew what they were doing. And we called them to verify, and they didn't have an active commitment based on the borrower's information. But it ended up being that's because we had changed it from a personal name to an LLC or vice versa. So they hadn't updated their commitment, and as soon as their commitment was updated, everything was kosher and it was fine.
Yeah. No, it's important to have these checks in place. So let's switch gears a little bit and talk about cyber fraud, because that's the real common one that's going on out there. Like title companies are paranoid about it. Banks are, lenders like us are, and it can pop up in a number of different ways. So here's one common one this is like the one thing that we've gotten duped on, knock on wood, got duped on silly cyber fraud for small amounts of money twice, about 10 years apart, something like that, call it. So, the scammers out there somewhere in the interwebs, they can come up with all kinds of ways to make them look like you. Like somebody in our organization could receive an email from Jason Balin, and there could be little funky things in there that make it seem off. Like it says Jason Balin, but the email address is wrong, or just the language they use and how they say what they say in the email seems a little fishy. But this stuff has happened, and hit up one of our accountants and be like, hey, can you cut a check to this person for so-and-so for this reason? And that's not coming from us. That is some cyber scammer. That can happen. And again, something like a check is less risky because, well, I mean, there has to be checks and, balances and all this stuff. So like checks should have to be signed by people as a double check. Like the accountant can't just sign it and send it out, because then only one person needs to be tricked instead of two. Or if they're like, hey, wire this money to this person, you should have one of the owners of the company approving wires. That's what we do. So one person enters them, our accountant, and then Jason and I will approve them to give that kind of check, just in case somebody does get tricked in our organization. But again, I wanted to mention the changing of wire instructions. That is an immediate red flag. Everyone in our organization knows it. Every title company knows it. So just wanted to repeat that one again. And then another fun one, use that sarcastically, another fun one that we saw not too long ago was from one of our company email addresses, we issued a payoff statement to a title company. Totally normal, happens every day.
Forgot about this.
This title company received a second payoff statement that looked like it came from us, only the bank information on the PDF was different. Now, who the hell got that document? And they change it around, and like, how'd they intercept that? How did like, I don't know. There's no way to know. But the title company caught it. The processor called us up. She called you directly?
Yep.
She called you directly and be like, whoa, what's up with this account change? Because it changed from, the bank we use to a completely different one. And she was like, why would I need a second payoff statement with a different bank account? This is fishy. Everybody's on edge about this stuff. So she called up and we were like, wow, that is some sneaky fraud attempt right there.
Yeah. I mean, yeah, I know. I'm trying to think if we had any other things. I wrote down on my list to talk about insurance fraud, but that, I don't know. That we haven't really been involved in, besides title insurance.
And we do have, we have an insurance policy in place for this kind of stuff. It's not an easy one to get for a lender because our industry is so like non-regulated, but it's basically like an E&O, an errors and omissions policy, and it has a cyber fraud rider too. So we do have a very expensive policy that we cut a check for once a year, just in case some real shit goes down and we get scammed out of a bunch of money. Then we have that as like a, last resort kind of thing. It's the sort of policy we hope we never have to use. We'd rather put these checks in place and like be very, very careful out there. Hopefully no one listening or watching has gotten caught with their pants down with some kind of scam. I really hope that's not the case. Just be aware that it's out there and people are trying every day to steal from lenders. So hopefully it doesn't happen to anyone here. Until next time, guys, check out hardmoneymastermind.com. Join the conversation in there. We'll see everyone next time on the Private Lenders Podcast.
We hope you enjoyed this episode of the Private Lenders Podcast. Please note that the opinions stated by all the speakers on this show are only opinions and not intended for legal, financial, or accounting advice. Please make sure to always check with your own legal, accounting, and financial professionals. If you enjoyed this episode of the Private Lenders Podcast, we'd appreciate it if you would spread the word. Make sure to check out hardmoneymastermind.com, the #1 free community for new and experienced private and hard money lenders.